Good morning. It's Harvey Jackson. Lots of news in the market here today. Yemen is striking Israel, and how that could actually impose some problems for just another pinch point. But they seem to be just attacking Israel and not so much concentrating on that narrow passage. So you can see here that they actually had a couple strikes to Israel and Air Force targets, Iranian infrastructure as well. So there's fighting is still continuing over there. That is for certain. So you got this strait here that Yemen has been in control of, but it looks like pretty good flow of traffic through there. So Yemen was sending missiles over there, and Israel seems to be maybe the aggressor for sure in this conflict, more than maybe even the U.S. But here's your Strait of Hormuz as well. So this is already pinched off for anything that's non-friendly flagged. India has had some more vessels go through there to go to India on oil, and there's lots to digest there. But the crude oil and everything else is actually going sky high. You can see that the commitment traders have actually put in a lot of length into grain contracts. Susan Stroud was just talking about the RVO, so the renewable fuel mandate. The 50% RIN that will come in 28 is not all necessarily bullish for the fact that it's going to take a fair bit of ramping up of production just to match the requirement that they need here for the mandates. And it's kind of pointed out here too. So it 5.8 billion gallons implied for 26, and then up 60% versus the 25 year 25, 70% SRE reallocation adds incremental demand back into the system. So that reallocation actually puts more requirements of the renewable fuel requirements. So soybean versus corn ratio, and it favors soybeans. So you can see that this ratio is actually favoring soybeans at the moment. So we'll have to see how the USDA report comes out tomorrow on the acreage survey. It will not be the acres that will get planted, but it's actually just going to give you a bit of an idea where the starting point is, and the market does trade it. Just a different visual of exports versus crush. So this is the last week's export numbers, and it is on just showing over 5 million metric tons, and your crush disappearance is actually ahead of last year as well. I thought this was just pretty cool graphic, and I should maybe call this guy Carney, because he really doesn't care. He's pouring the gas on it here too by adding more taxes. Just a breakout of increase in prices. Heating oil is up 77%. I'll show you that. Natural gas, Brent, diesel fuel, sulfur, gasoline, fertilizer up 29, palm oil 14. So you can see that there's lots of inflationary measures there for sure. Quick look at the weather. You can see that there is some weather basically skirting the Saskatchewan and U.S. border and into Manitoba, basically going straight west to east here. Red flag warnings are still in effect over here. That is red flag is a good chance, or a chance that the fires could get started with winds. You can see that there was a fair bit of snow that actually landed it just south of the border as well. Canola currently up $8.60 at 7.29. November at 7.38, up 10.60. So it's actually trying to narrow that gap there, that spread between July and November there, just slightly. Just as I took this picture anyway. Rapeseed is up $4.75 at 5.05. Soybean oil is up 1.39 cents at 68.80. Trying to make some new highs there. Palm oil up 139 ringgit, so it's actually broke out of some of the resistance lines there and changed direction. Crude oil up $2.07, 101.71 on the West Texas, and Brent is up $3.03 at 115.60, and your diesel fuel futures is up 13 cents at 462. Soybeans up 9 cents, and the meal is down. Your spring wheat is just basically unchanged, and your Kansas was just down slightly, and your Chicago was up a penny and a quarter. Canadian dollar is down again at 72 cents. So you can see that it's remaining and supporting on this line. It needs to break out above there, but you can see that on the November contract, you are trying to break out. So if you break out, there's There still could be some more upside there, but we'll have to kind of see how this is all going to play out. Fundamentals should start to kind of play in now that those markets for the renewable fuels are known. Uh, Here's a European, not anywhere close to the highs that were made, and the price differential is at $79.40. Price differential between the European canola and Canadian canola priced in Canadian dollars. And if we remember that it has to be, uh, very likely 100 to 150 before you'll start to see significant imports from Canada through the eastern, through Thunder Bay and the Great Lakes. Soybean oil futures trying to get to this previous high, even though it was a red candle. They did rally pretty hard that day and pull back significantly, but we're climbing and edging our way back there. And the soybeans seem to be respecting this previous high that got made as a kind of a ceiling, and a lot of moving averages are still trading above it. Here's your crude oil. Palm oil actually broke out, and I think it's part in this story right here. B50 is in the mix for next year on Indonesia, and some of that is the European deforestation plan that they have that's causing a lot of pressure for other countries, including Brazil on soybeans and Indonesia and Malaysia on their deforestation. So they're going to use their own products more and more. Here's just a quick visual. Your diesel fuel futures up 73%. Your West Texas Intermediate up 52%. Your soybean oil up 11 since the beginning of the month, and canola is up 6, and soybeans are actually down over month. Here's your crude oil. It's red at the moment, but if it closes green, it's actually going to be, if the body is green, at the end of the day, it would be a positive thing, positive for the market to go up, which we do not want. Here's your New York Harbor diesel fuel futures trying to get back to the same highs that we were at before. Canadian dollar just keeps on leaking lower. This is not a good sign. When you have crude oil going up and the Canadian dollar going down, there is a problem, and it's partly because we've hampered our we can't get the crude oil to the market. We have to go through the U.S. We don't have enough export market to actually be able to sustain here. And there's a little bit of controversy in the Liberal government there as well. What's going on with China and everything else. U.S. dollar index, it's on its way up, but you would think it would be a lot higher than that if they are a petrodollar. Here's wheat trying to break out here. That's a great sign for wheat, and we are getting close to that $7 mark. I had told a few clients that we would maybe get their first 5 to 10% sold at for new crop with the futures only for November into January timeline. So but don't do a whole lot. I'm still looking at the $8 off the combine as your cash flow bin space requirements. So from August, September kind of movement, put in your $8 targets there. Kansas, same signal. Looks like it's if we can get turn green here, we'll be breaking out. Not so much on the Chicago, but or the French wheat. But nice trend for corn. It continues to ramp up here. So tomorrow there should be our USDA report for the acreage survey will be out at 11 o'clock.